Hi everybody, welcome to the live coverage of the Federal Reserve decision for July. Today the Fed makes a change in rates, or not, probably not. We're here, Valeria Bednarik and myself. Hi Valeria.
Hi, Yohay, how are you?
I'm great, I hope we'll have some action. Do you expect any action today?
I pray for action, to be honest. I'm thinking that we are going to have a non-event. I'm already in a bad mood ahead of the release. Just thinking we are not going to get much.
Yeah, so I'll remind everybody, today we have no press conference, no new forecasts, only a statement by the Federal Reserve, chaired by Janet Yellen. And so we're not expecting a rate hike. That's indeed the expectations. Do you think we'll have a... Sorry.
Maybe a change in the wording on the statement. I do believe that maybe they will assess a bit more about Brexit, or I don't know, the improvement in the economic situation, economic conditions in the US. But that's the most I'm expecting for today. I really hope I'm wrong, really.
Yeah.
The one that's offering us a bit more of action is the Bank of Japan, right?
Oh, yeah.
Things going wild in Japan with backs and forth and talks and denials and more talks and confirmations. To be honest, I'm not sure what to believe at this point, but at least it seems they are going to act this time. Maybe not the bank, but at least the government with a fiscal stimulus package, not only just an extension of a monetary stimulus by the Bank of Japan, or I don't know, maybe further negative rates, right?
Yeah, I think they will disappoint us this time, but they'll maybe do it just a little bit, as you said. In any case, I believe that their rate decision from Japan early on Friday will probably trigger more action than the Fed today.
Yeah. It's already triggering more action. Anyway, I was thinking that the problem these days is the euro and the pound, meaning the rest of the currencies are moving, commodities are moving, stocks are also giving us some action, but the euro and the pound are pretty much dead. I can understand the pound after the Brexit and the uncertainty we have surrounding the event, and the market trying to find a new equilibrium balance in the pair, but I'm not sure if I can understand what's going on with the euro, you know, because yeah, we have sort of a bearish tone in the cross, the pair, but still it's still slow. Meaning we had what, 30 pips today, daily range, 50 yesterday, 40 Monday, meaning this.
I'll mention that on Thursday we had the ECB decision.
Yeah.
Mario Draghi, the magician, we were covering it together, and wow, that was hardly any movement. I mean, for
exactly. So, what about most traded pair of the world? What happened with that one? It's not the euro, to be honest. Not anymore. Not any longer.
Yeah, I think that maybe we'll need to have some kind of a bank run, maybe in Italy, or I don't know where, to move the euro, or I don't know, the US elections, of course, will trigger action, but yeah, maybe there's just too much liquidity. Anyway, the world's most popular pair is just stuck for a very long time. Sometimes we do have movements. Of course, we had a movement on Brexit, but that was very short-lived, and then we're back to this boring normal.
Yeah, I'm not sure which one will be the trigger, but indeed it needs to be a big one, because here is there fading, just doing nothing. But well, here we are, and in a, I don't know, unlikely a scenario that the Fed surprises with extreme positive, extremely hawkish stance today, and of course I'm not talking about even considering the possibility of moving rates. Maybe the pair can reach this 910, the low, the post-Brexit low, on a break below 950, which is this week low. Those are my levels for today towards the downside. And to the upside, there is some of a resistance area in between 1040 and 1060, but the pair has been selling pretty much ever since 3 weeks ago, the Brexit. So I do believe that that's the main resistance I'm looking for. So that's my expected range, the widest I can imagine for today if we don't have any real shock, 910 and 1060.
Yeah, I'm afraid I have to agree. We'll probably see a narrow range. Don't expect fireworks unless we have a big surprise. But I don't expect surprise. What we can expect from the Fed, what I have shown in the morning show as well, basically no changes expected. It's a dilemma between the local economy, the U.S. economy, which is showing some positive signs. Not all of them. Housing figures are positive. Retail sales were good, but today's durable goods orders were not so good. Jobs figures, I mean, NFP was a rebound after a bad one. So it's basically okay. On the other hand, we have Brexit, we have China, all the global worries, and the basic thing with the Fed. The Fed is dovish. So that's why I don't expect not a rate hike, of course, like everybody else. And I also don't expect a hint about a rate hike in September. I think that December is possible, assuming, well, after the elections, assuming the U.S. economy continues showing positive signs. When do you think we could see a rate hike?
Honestly, at this point, I don't believe we are going to have one this year unless the data is extremely positive from now on. And I was thinking about that yesterday, and today I'm doubting about it because of poor durable goods orders we got, you know. Data was really strong in pretty much every front, but today we have that poor report, and I'm reconsidering the fact that, well, things are good, but maybe not that good as I was thinking in the US. I don't know, maybe it's just one bad number alone, and we had better figures next month in that front, but in the meantime, the point, also we had yesterday the market PMI, services PMI, I'm sorry, being quite disappointing, right, also. So putting less faith on the Fed for this year, to be honest. Probably the second half of 2017 for me.
Yeah. Yeah, for the Fed, probably it's not enough to have most figures looking good. The Fed is dovish, and it needs all figures, or almost all figures, to look good. And yeah, we have lots of worries as well. I'll mention that in August, at the end of August, there is this convention, this conference in Jackson Hole, Wyoming, where in the past Ben Bernanke gave us some hints about future policy. So I've read some analysis saying that Janet Yellen could take advantage of this meeting to hint about a hike in September. I remain also very skeptical. Yeah, that's about it.
Back to what I was saying earlier, the euro is not even reacting to what the Swiss is doing, you know. We have no confirmation, but you can smell the hand of the Switzerland National Bank behind this latest Swiss franc strength. I was checking my charts. The pair is up to a 3-month high, right? We are at the highest in 3 months, 99.50. We are barely, what, 20, 30 pips away. We have been rising steadily. Take a look, higher highs daily basis, and still the euro is not reacting to this. So I don't know, if something can't fall, at some point it will rise, right? Let's see if that's the case, but the euro is not rising, not falling, not nothing at this point.
Yeah.
And about Jackson Hole, it's now in August. I was I maybe was thinking about a bit later in the year, but well, the year flat.
Yeah. Jackson Hole Symposium. If I can find some information about this.
Yeah, it's okay.
But anyway, regarding the euro, we do have the stress tests, the bank stress tests on Friday. So yeah, they're published at 8 p.m. GMT, which is basically when New York closes. They don't want any big market movements. In the past, we've learned that these tests are relatively light. They don't really reflect what's the real problems in the banks. This is sort of a deadline for the European authorities to resolve the issues with Italian banks, mostly Monte dei Paschi with the non-performing loans. What kind of bailout are they going to get from the state or from bondholders? But as with everything in Europe, there can always be a delay. They can always kick the can down the road.
Yeah.
And so
I was thinking about that. Yeah, I guess all the attention with the stress test will be in Italy. We don't expect much surprises from other major economies in Europe, and of course that's the Damocles sword pending over the European head, right? Right now, among others, Greece, Brexit, and so on. Anyway, do you think the euro area can fall apart at some point in our lifetime? I'm thinking that it's possible. I'm thinking that the Eurozone has been a bad project, and it's proven it, and they're not doing enough to save it. Maybe I'm wrong, but I'm thinking of that.
Well, it has survived quite a few crises, but because there is a political will to keep it. Politically, I mean, you can travel from country to country using the same currency. It's a sign of unity, of being together, not only the flag, but not only free movement, but also one currency. Economically, it hasn't been a success. One central bank, but different fiscal decisions, no unified tax. Even the banking union is not really significant. It doesn't have teeth. And we've seen that once we had a crisis, well, it began in Greece and then other countries, they never really fully were able to resolve it. So yeah, and there's such a big difference between the countries in the Eurozone. Remember that the Maastricht Treaty in 1992 said that there's a limit of 60% debt to GDP ratio and 3% annual deficit. And the first countries that broke these rules were Germany and France, the biggest, strongest countries. So they're sort of fixing small, doing patches each time there's a crisis, but there's never a full resolution. And if we have changes of government, we could have maybe things falling apart. So far, they've been holding on. There is a lot of political will, contrary to the economic troubles, but without real resolutions, I don't see. Yeah, I tend to agree there is a danger that it'll fall apart.
Yeah. What do you think about the Aussie? Did you see what happened today with the Australian dollar?
Yeah, actually, inflation figures were not that bad. It came out headline CPI 0. Sorry.
Yeah, better than expected. Sorry.
Yeah. So, and looking at the charts, we're seeing Australian dollar relatively lower in range. So, I would explain that as a general, well, sort of gloomy atmosphere. Sorry?
Bulls giving up?
Yeah, maybe.
I was thinking about that, yeah. Because the first inflation, the reaction to inflation was positive, and the pair was unable to hold gains. Of course, it was influenced by the yen slide, right? The dollar got stronger during Asian hours, but the pair was unable to recover afterwards, even despite the yen needed partially, and beyond their own Australian macro data. Sorry, so I'm thinking that maybe bulls are starting to give up in this one. I was holding a pretty bullish stance in the cross, and now I'm not that happily bullish in the Aussie. I believe that this zone, the 74.50 region, is a huge risk, and we are too close to it, and we are returning to it steadily for this past 2 weeks. So there's a good chance that we will finally break turn south.
Yeah. This could be the vulnerable currency.
Yeah.
Australian dollar.
It was among the strongest, but today it's quite vulnerable.
Yeah, and when it can't go up on good news, then on neutral news from the Fed, it could certainly fall.
The euro rose 10 pips, Yohay.
Yeah, 10 minutes to go. I see Mauricio is here.
Is he? He's having trouble. Hi,
I
Mauricio.
see his face. Yeah.
Yeah, but since he can hear us.
Hi guys. How are you? Sorry for the inconvenience. I don't know. There is a lot of noise here because I have to move to.
We can't hear you quite well.
No.
You're being cut off.
In the United States. So, can you hear me well?
You're being cut off occasionally, so anyway. So Mauricio disappeared.
Ah, well.
Show must go on. So if we talked about the Australian dollar as being weak, do you see any other currency as being strong?
To be honest, no, not at this point, right? I was considering the LC being among the strongest, and now we have this price action that's telling me otherwise. And in fact, and despite the latest movement, we could think that the Japanese yen is a strong currency, because we have 105, meaning it's very low level, meaning the comfort zone for the pair, for the Bank of Japan, it would be something near 120 probably. So despite these latest wild swings, the fact is that the Japanese yen remains strong. Of course, we have the Bank of Japan and the Fed pending, so anything can happen. We can talk back about this on Friday, about yen's probable strength, but no.
Yeah. Lots of rumors and counter-rumors. Basically, dollar-yen is still way above the post-Brexit levels because of talk about stimulus, monetary and fiscal, maybe monetary and fiscal coming together, helicopter money, perpetual bonds, many denials, many confusing figures. We'll get clearer answers or something of more substance on Friday, and then I think, if I'm not mistaken, next week we'll have an announcement from the government.
Yeah, I was reading something like that, early August.
Yeah, I thought it would come this morning. Well, lots of confusion from Japan that they do intend to provide some stimulus. The big question is, will it be enough for markets, which are very hungry for as much as possible?
But for once, it would be good that they act at this point. They will actually act instead of only talking. But maybe they will get what they want if they do so. But higher inflation, a weaker currency. But at this point, it's hard to believe them.
Yeah, my suspicion is that they will not act before the US elections because Japan was singled out many times by the United States as a sort of currency manipulator, not exactly in the same line like China, but sort of they were warned not to do too much monetary policy, not to weaken the yen too much. G20 statements, G20 meetings were in many occasions about this monetary action from Japan, and this will be an issue in the elections, with trade being an important topic also for Clinton, now influenced by Sanders and also by Trump. So I think it'll come after the elections, but you never know. The Bank of Japan surprised us many times in the past, and
yeah, maybe they do that also.
Yeah.
Okay, 5 minutes to go. Here we are, waiting for the Fed, hoping it's an event, not a non-event.
Yeah. I will add that on Friday we have the GDP figures.
Yeah, advanced one.
Yeah, the preliminary, the first ones, the sort of hot off the press.
Yeah, that's a good one. That's usually a good market mover.
Yeah. And the Fed probably has the numbers already.
We don't.
We don't. But I guess the expectations are a bit lower now after the durable goods orders you mentioned before. Yeah. Perhaps the statement from the Fed could provide us with some kind of hint. If it's more hawkish, maybe we'll have a strong GDP number. If it's more dovish, a weaker GDP number, but they will not want to come out with a hawkish statement only to see poor GDP. They don't want to come out as fools.
Do you imagine a Fed with Trump as a president?
That would be funny, no? Well, anything would be, well, funny and tragic, but he said he doesn't want Yellen to continue, and he's in favor of low rates. But he said so many contradicting things on so many topics, so you never know.
Yeah.
It'll make the work of the Fed harder, I guess. But,
There's a comment saying that Fed will state it will build a wall around Wall Street against illegal immigration. That's comments. Yeah, no one is expecting much today. Not even traders.
Yeah.
This is one of those times when you will be happily wrong, right?
Oh yeah, I really hope I'm wrong. Hope we are wrong.
Yeah, I mean we.
Yeah, it's
really. I really want to be wrong, really wrong about everything.
Yeah. What I have now on the screen is the updated forecast by 538. Nate Silver and his team, they correctly projected the elections in 2012, 50 out of 50 states, and in 2008, 49 out of 50 states. And at the moment, they see a very small advantage for Hillary Clinton, only 52% chance of winning. And it was around 80% before, well, a month ago. So this is the change. So it's a very tight race for the White House. But analysts do expect Clinton to get a what's called post-convention bounce like Trump got last week. Anyway, we have the Fed coming up, no?
Yeah, 2 minutes. Yeah, I was thinking if that small difference it's enough to grant Hillary the victory in the case the final vote comes in that line, or do they have a different law? Because I know in here that has to be a large majority in between both parties. If they're too tight with less than 5% difference, maybe in here at least we'll go for a second round, you know. But I'm not sure in the US if that's not, given that they have just two candidates.
In the US, it depends on the states. So there's a winner for every state. Winner takes all. So, and each state has a number of electors. for instance, in the year 2000, Al Gore got more votes than Bush, but because of the states, Florida, and Bush became president. So.
Oh, okay. Okay, guys, we are almost there. Remember, we have a bit of delay, so you will get the news in your charts before hearing from us, okay? We will be commenting the results a few seconds afterwards, and there we go. Oopsie. The dollar is sharply higher across the board.
Yeah, what's going on? They did not raise rates, right?
No, they hold rates and change, as far as I can see. But the dollar is suddenly... Okay, there was one dissenter favoring a quarter-point raise. But
Mr. George, no?
Yeah.
Okay, stronger dollar, but we have a bounce back up.
Yeah, but the market quickly erased it.
Yeah, let's take a look. Near-term risks to economic outlook have diminished, and as you said, one dissenter.
Yeah. Canadian dollars, poor Canadian dollar. The Aussie.
Yeah, Canadian dollar suffered earlier today from inventory data, another slip in oil prices.
Yeah. There goes the Aussie breaking below my mayor's support.
Yeah, good call. You saw the weakness of the Australian dollar. So let's try to capture more figures from the statement. In any case, we have a stronger dollar. We do have a reaction in markets.
Appears open for a September hike, I'm seeing in my Twitter.
Big fall in the Australian dollar. Okay, after the initial bounce, also euro dollar remains lower. Let's see if they mention international developments. Yeah. Readings and okay.
The Fed said that the labor market has strengthened and the economy is expanding at a moderate pace.
Moderate means under 3%.
Yeah. Near-term risk has diminished.
That's positive.
Yeah.
Labor market strengthened. Job gains were strong in June. Okay, so they do acknowledge the improvement in the jobs market. Okay.
Yeah, I'm not seeing if they made any comments about Brexit or how it could affect the economy.
They mentioned international developments.
Okay, but overall, it's a hawkish statement we were all waiting for. This reaction is a bit based probably on the one voting for hiking rates, our friend George, but
yeah, inflation, they didn't change it. Market-based measures of inflation compensation remain low. Most survey-based measures of longer-term inflation expectations are little changed on balance in recent months. No change there.
The committee currently expects that with gradual adjustments in the stance of monetary policy, economic activity will expand at a moderate pace and labor market indicator will strengthen. Inflation is expected to remain low in the near term because of energy prices, once again, but rise towards the 2%, yeah, or the medium term. Near-term risk to the economic outlook have diminished.
Yeah. Regarding rates, they more or less, I think, maintain the same text, not like in October. In October, they said the next meeting. This time, once again, they said future adjustments to the target rate. So I don't see there any hint about September.
I do believe that the market is so eager to get a rate hike. They are pricing in with the little the Fed offered, because the Fed just offered little, don't fool yourself. It's not a real hint on what they will do in the future, but they have acknowledged that the economic slowdown seen late 2015, early this year, has been averted, and that the economy is growing, something we already knew, and the Fed also. But still, there's a long way to go for a rate hike. I hope I'm wrong, really, but it's a hawkish statement indeed.
Yeah, I would say slightly hawkish because they acknowledge the improvement. Risks have diminished. Brexit probably is not that terrible because it isn't mentioned, in name at least. No change in inflation, acknowledging employment. Yeah, but again, no hint for rate hike soon. The next move will be raising rates, but that can take a very long time, as you said, maybe sometime next year. Let's see if we have a change in interest rates. No, it doesn't look updated. Okay, so according to bond markets, they see a rate hike in December. Maybe 50.1%.
Yeah.
No, sorry, just under 50% for rate hike.
Well, the market is taking it good, but what I'm seeing is that gold prices have erased the decline. The euro also, the pound, it's already rising. So after 6 minutes, the market reaction is, or dollar gains, maybe better said, are not being sustainable. So let's give the market a few minutes more to see if they are able to move the greenback or not. The euro dollar fell down to 960, carrying losses a few above the weekly low. If we take that 950, maybe, that 950 post was on Monday, I believe. Maybe the pair can trigger some stops and extend its decline.
Yeah, here we are, euro dollar, basically unchanged on today. A bit lower after the announcement.
And gold it's looking for fresh highs.
Oil prices remain low.
Yeah. Oil is playing a different game.
Yeah. Looks like the Aussie and the Kiwi were the most vulnerable currencies.
Yeah.
But the yen was quite
neutral, right?
Neutral, yeah. And the euro, as always, neutral.
Yeah.
The pound is actually a bit higher now than before the release, but nothing special.
Not really. Pound to move away from the 30-32 range. The smaller range, the actual range I'm thinking of for the dollar pound, it's the low around 28 and this Fibonacci area around 33.20. We need to move away from this area. But if you take a look at this forward chart, it's really pitiful because there's nothing going on in here, right?
No.
Dollar is aiming to go back higher.
I think it's more or less as expected, no? I mean...
Yeah. Nothing shocking.
No. We see improvement in the economy. We knew that.
Yeah.
No rush to raise rates.
Yeah. Low inflation persisting.
No.
Nothing new under the sun there. Still higher. That's good. It's good to have some market moves. It's good to have mayors trying to break out something. But to be honest, beyond the commodity-related currencies, there have been no really significant moves in mayors or in the dollar Japanese yen so far, right?
Yeah.
Still, the euro is looking to break lower.
Yeah, in the case of the euro, we already had the rate decision. We have the stress tests. But I really don't know what will take the euro out of range. In case of the pound, we do have the rate decision next week, and expectations there are very high for some kind of action. So either the BOE will deliver and send the pound lower, or disappoint and send the pound higher. I don't see I see action in this decision.
Yeah.
Same with the yen.
Swiss franc tick higher, a couple of pips above previous high, and it's pressuring, in fact, the daily high, so that could give some life to the euro dollar also.
Yeah. The Swiss National Bank cares about the exchange rate of euro against the Swiss francs. Switzerland is surrounded by Eurozone countries, and they don't want to suffer deflation and uncompetitive exports. They intervene on a regular basis. They don't hide it. So we are seeing some movement of a stronger dollar.
Yeah.
So we're 12 minutes after the announcement.
The dollar is stronger.
Yeah, I think we can. Things have stabilized. I mean, we had the initial bounce, and now we are seeing sustained gain of the greenback. Euro dollar 109.60 has been the low. Next support 109.10. But
they are asking us if we really expect a rate hike in September. I have to say that for at least for me, no, I'm not expecting a rate hike in September. I don't know what about you, Yohay.
I agree. First of all, the Fed likes to prepare markets, and this time we didn't get any kind of hint about a rate hike in September. We didn't see the words in the next meeting. So hearing this from the Fed, we know that there's not going to be, well, most probably. In addition, it's too close to the U.S. elections, and the U.S. economy is okay, but not over the top. I think that with today's durable goods orders, with the statement from the Fed that growth is moderate, not solid, not expanding, we can expect another growth rate of something 2.5%. No inflation, no rush to raise rates before the elections. There's no urgency whatsoever.
Yeah, I do agree with that.
$109.76.7. Also, the Australian dollar is bouncing back a bit, but just looking at the chart, we can see a bigger move in the Aussie dollar.
Yeah, but still below that region I was talking about earlier today, you know?
Right. Yeah, there is a chance again if we have an excellent non-farm payrolls, excellent GDP, hopes about quick resolution for Brexit, which I don't see, that they'll use the Jackson Hole meeting to hint about rate hike in September. Very, very low chance in my opinion. I think we can expect more action from the Bank of Japan and from the Bank of England. And yeah. What else can we expect today? So we have some stability here on the charts. Let's show it to you once again. Let's take a look once again at the preview that I did in the morning show today. Yeah, so basically I don't think we had any big surprise. Talked about no change. The US economy is growing nicely. I was a bit surprised maybe that they did not talk too much about global worries. Of course, they consider international developments, but it's not something that made them change their decision. Steady inflation as expected. Balance in jobs, yes, the Fed is less worried. No hint for a rate hike in September, indeed. Maybe in Jackson Hole, maybe, but probably not. The Fed remains dovish, and so I would say slightly more hawkish than expected, but not a game changer whatsoever. Yeah, and after the initial rise of the US dollar, we are seeing...
Sorry. Yohay, I left you alone.
I kept on talking. I hope our viewers, listeners enjoyed my ramblings. Anyway,
yeah.
We are seeing now the dollar retreating.
Okay. Yeah, I can see it. Oh, pound is higher.
Yeah, maybe I asked you before what currency is here strongest. Well,
now it seems to be. Yeah.
Yeah, I think now we get an answer.
Yeah.
So the British pound stands out with positive reaction to the Fed decision, contrary to other currencies. Remember, the moves are limited. The Aussie seems to be the weakest link, and the cable, the pound, strongest one.
Yeah, Mauricio is asking what would be the most likely meeting to have a hike. December. After. We have been talking about this. We guess will be next year, right?
Yeah, for December we would need more positive signs from the US economy, even better than what we see now. Perhaps what we're seeing now is not enough. Stability about Brexit, stability in the political system, basically, I guess, Clinton, I mean, we know who she is and what her policies will be, no big changes. And, yeah, so then the Fed could hike in December again, assuming especially the US economy is okay. If the US economy is not so good, political uncertainty in the US or outside the US, yeah, maybe next year, middle of next year, in a year from now.
Yeah, not before March, April. That will be for me the soonest date. unless we have really, really outstanding data in all fronts, as we were discussing earlier today.
Yeah. In theory, the job market continues tightening, and tighter job market means higher wages. Higher wages mean more inflation, and then the Fed has both of its mandates running hot, and then it would need to hike. So far, everything is moving very slow, as Christine Lagarde said, the new mediocre. So I don't see that. I mean, I don't see sudden acceleration in the U.S. economy.
No, me neither.
So, well, I think if we look now at euro dollar, we're seeing it.
Yeah, trading pips higher.
Back to the drawing board.
Yeah.
Okay. Even above 110, just touching 110 at the moment. So basically, euro dollar erasing all its Fed losses. Yen very stable. Aussie recovering.
Yeah. What do you think about oil? We're there, still down. I know that this latest decline, it's being blamed on excess of derivatives, right? Oil production is rising in the U.S. We have more drilling oil rigs in the U.S. and huge amounts of gasoline stockpiles. But I don't know. I do believe that there's a good chance that we can break lower at this point. I was not really seeing the commodity plummeting this way, but now it has turned sharply near. I believe there's a chance that we can go even lower, maybe down to 37, 38, and the momentum we are getting these days, rather than thinking of further weakness. Still, we have oil stocks tomorrow, right?
We had oil stocks today. I mean,
we had them today. Oh, sorry.
Yeah, they showed once again sort of that production continues rising.
Okay.
In the U.S. Tomorrow we'll have the oil rigs. Sorry, not tomorrow, on Friday. Anyway, yeah, production in the U.S. turned around. High prices meant for producers we can pump out more oil, sell more oil, lower prices. And in addition, U.S. consumers, now it's driving season, holiday season in the United States. They're supposed to drive, and they're doing it not as much as expected. I also wasn't expecting a big slide in oil now. I thought it would happen later in the year. But here we are, I guess, with the flexible production of oil in the United States. There is some kind of ceiling, some cap in the level of in the oil price. Still too much supply, not enough demand. Yeah, I'm not well, maybe you could see a dip under 40, but then perhaps we'll see the U.S. production rise back, fall.
Fall back, yeah, I understand what you mean.
Yeah.
Think of the pound and the euro.
What's going on?
So we had both currencies testing the base of their latest range, and now they are pressuring the tops of those ranges. But to be honest, there's nothing there telling us that there's certain directional strength, or that there is a trend starting to unveil. There's nothing. We are talking about really tight ranges because the euro is, 45 pips today, range 50. US stocks are higher after the Fed. That's telling me that they are not really believing that the Fed will raise rates this year, at least not in September. And it's logical because the Fed needs a bit more data also, particularly from outside, maybe not only from the US, but as Yohay mentioned earlier, Chinese developments, Brexit, everything is affecting the market.
Yeah. Chances for rate hike in September, updated numbers, according to bond markets, 18% chance, very, very low.
That we have it move in September, right? Yeah.
Yeah. First rate hike, according to bond markets, in March, only in March, as you mentioned. Looks like markets have changed their minds a bit about the hawkishness, dovishness. US dollar is now retreating. Even the weak Aussie is now balanced.
Yeah.
Yeah, okay, and so yeah, pound looks good.
The only one not reacting so far is the dollar Japanese yen, right?
Yeah, it's balanced. I guess the big focus for dollar yen is on, of course, the Bank of Japan's decision in about less than 36 hours, I guess. Anyway. Okay.
Gold is higher, but not much, to be honest. If you take a look at the daily chart, we are topping at this Fibonacci area that has been capping the metal for 2 weeks still. Yes, gold buyers are cheering the fact that the Fed did not act and hoping the Fed won't act in the near future, but still not really convinced by marked commodity, as it has been stuck within this range between those two Fibonacci levels for long. I do believe that this former low around 35 something, let me check. Yeah, 35.15. It's a level to watch, because I would like the commodity to settle above this which was the neckline of this double roof to regain some upward potential, real upward potential. In the meantime, I believe that this is the highest we can get so far today. Not much, unless we got that level. Not really that I'm saying it bearish. It's just that we just get into a consolidated stage, and we'll probably keep in there. Sorry. Okay, not much really going on because we was back around 10:05. Nothing really.
Yeah, the levels we're all familiar with.
Yeah.
Okay. So
let's give them a couple more minutes to see if we have some definitions, but not much there going on.
yeah. Rate hike expectations. That hasn't changed.
Yeah, this. I guess we can say that odds of a hike rose moderately after this statement, but
Yeah.
they're not really convincing, you know? They're not convincing us, not convincing anyone.
Yeah, I think they just did not tell us anything we didn't know. They told us that there is improvement in jobs. We knew that. Inflation is stable. We knew that. For me, the only half surprise was that they weren't that worried about international developments, Brexit especially. Maybe enough time has passed. It's already more than a month, and they're less worried. So it didn't have big impact.
Yeah.
And they also told us that basically there's no rate hike coming in September, at least according to what they see now, and that was also no big surprise.
Okay, no more headlines coming out either.
Okay.
So I guess we can wrap it up. What do you think?
Yeah, we certainly can.
Okay. Who starts?
Yeah, ladies, of course.
I know you were going to say that. Okay.
Always say the same.
Okay, well, I have to say that the Fed delivered pretty much what the market was expecting, a hawkish stance, not enough to convince us that they were going to raise rates next September, later this year. The market reacted positively to the dollar, reacted positively to the hawkish tone initially, but then reversed the gains, but then it's back trying to recover. Overall, there are no huge changes in measures after the Fed. Unfortunately, we can say that it was pretty much non-event, despite the euro has moved between 60 pips in the way. I do believe that there's a lot of uncertainty still around the world to for the Fed to raise rates, you know, and there's high levels of uncertainty coming from China, as you had said, coming from the Brexit, with Europe not sure what to do with it, being probably the biggest one. But anyway, in the market, what I can see is that the euro and the pound are far from setting a trend. I got that we are in summer in the North Hemisphere and volumes tends to be lower, so not expecting anything from those two in the upcoming days, to be honest. Maybe waiting for something happening with the pound with the next Bank of England August meeting and not before. We have discussed the range there. I'm seeing a lot of weakness in commodity currencies. Today's price action in the Aussie is telling me the pair could fall further. Canadian dollar is weaker also by its own data as well as New Zealand one, which makes them far more interesting to trade than European ones. Dollar Japanese yen is hold and wait and see until Friday when we have the Bank of Japan. I guess the market is expecting from some action there, although we are not. And finally, the Swiss franc. I could stay away from that pair, given that the Switzerland National Bank it's doing something we don't know, we don't have actual news from, but they're indeed intervening in the market somehow. So not much attention for that pair from me. Okay, that's my view.
Okay, I don't have too much to add, just that the Fed did not tell us something we didn't know about the U.S. economy. Jobs are better. inflation stable, and they didn't raise rates, of course. They didn't do any change. They did not provide either any hint for September, also not a surprise. The half surprise was maybe that they weren't that worried about international developments. And one member dissented, Esther George, not a surprise, she's a known hawk. The Fed tells us that every meeting is a live event. This was certainly more of a dead event.
Yeah.
But as Valeria said, don't worry, Friday we have a big day. We have the Bank of Japan. Even if they disappoint markets, it's going to be a huge move in, well, I hope, big move in the yen.
I do believe the same, that even if they don't, if they don't act, anyway, we are going to have some action there. And we have the US GDP afterwards, so...
yeah, and also in Europe, we have GDP figures coming out from Europe, and then the stress tests at night, so tomorrow, and Friday we'll have action. And I guess that's it. A slightly stronger dollar, then some backtracking, and as Valeria said, I'll just add regarding commodity currencies that I think that the slide in oil prices is having sort of a collateral effect, collateral damage also regarding the Australian dollar that showed a lot of weakness. And as always, the Aussie Kiwi and even the CAD sometimes are more interesting pairs to trade than the classic majors, especially Euro Dollar, the world's most popular pair, which does not deserve to be popular at all.
Yeah, anymore. Still bear. Okay. Yeah. Still looking really, really bearish for me, unless we beat that post-Brexit heights around 1190. We have top there twice, and then lower highs, lower highs, lower highs. So that's the line in the sun. Unless we get up above that, the pair is bearish.
Yeah.
Sorry, I talk too much, right? Anyway, thanks, guys, for being here with us. It has been a pity that Mauricio couldn't join us full time because he had a lot of connection issues. But we miss you, Mauricio. Hope we see you back on Friday, and see you back then, all you too, guys. Waiting for you with the live coverage for the GDP. Okay. Thank you, and thanks, Yohay, for sharing this time with us. It's always a pleasure, okay?
My pleasure. I hope you found it interesting, and we'll have more action on Friday. It's easy to have more action on Friday given the action today, so...
Yeah.
Yeah.
Same here. Thank you. Bye-bye, all.
Ciao.
Bye.